name's Gabriel Sacks. I'm one of the lead managers of Aberdeen Asia Focus. I grew up in Brazil and I've been working with Aberdeen's Asian and Emerging Market Equities team for the past 15 years, 10 of which in London and 5 in Singapore. Aberdeen Asia Focus is a UK-listed investment trust with the aim of maximizing total return from a portfolio of smaller companies in Asia, excluding Japan. What that means in practice for us is that we're really looking to find the best quality companies we can find in the world's fastest growing markets, companies that are leaders in their fields and that are tied to structural growth themes across Asia. Our closed-end structure is ideal because it gives us an opportunity to go further down the market cap spectrum and buy smaller and more liquid companies, which means we're really running truly differentiated portfolios versus what else is out there. First thing to say is that our process really centered around quality. That's been the case since the trust inception 30 years ago. We have a team of around 40 analysts and fund managers based on the ground in Asia, and their job is really to meet management teams and write research on stocks on an ongoing basis. We're looking for the most compelling ideas over a 3-year time horizon. In terms of bringing a new idea into the portfolio, we spend a lot of time filtering companies and creating a watch list, a pipeline of ideas per sector. We refresh that sector list every 6 months. We also do a lot of country trips, and we have quantitative tools that help us filter out companies that we think are the most attractive, either by value, growth, earnings momentum, and that helps us when identifying new ideas. Once we like a company, we've met with the management team, we write an initiation note, and that gets peer reviewed by our colleagues. And again, we're filtering out the companies by quality there. So we're very fortunate to have a large and experienced team that help to bring out new ideas for us and also do the ongoing research on the holdings in the portfolio. Over the last 3 years to the end of March 2024, the net asset value of the trust has risen 22.6%. That compares to our closest benchmark, the MSCI Asia ex-Japan Small Cap Index, which has risen 18.2%. The other thing, this is all in pound terms, the other thing I'd highlight, which I think is important, is versus the large cap benchmark, that benchmark MSCI Asia ex-Japan has fallen 11% over that period. And the reason I mention it is a lot of investors look at Asia as a broad region and allocate either passively or through mainstream funds. And we feel that they are overlooking the opportunity in smaller companies where there's been this material outperformance of over 30% in the last 3 years. In terms of the income generated by the fund, we generate a yield of around 3%. We do focus a lot on cash generative companies, but we do have a spectrum of companies, some of which use that cash to reinvest in their business and don't pay any dividend, to some companies that are paying dividend yields close to 10%. The board has committed to pay a progressive dividend on the trust, so you should expect the ordinary dividends of the trust to grow from this point on. We are trading at a discount to net asset value. The discount has averaged around 13% over the last 3 years. Currently, it sits wider than that at around 17%. We think this offers really compelling value, both the discount itself, but also the portfolio is trading at around 14 times forward earnings, which we think is an attractive level. And when you compare that to the sector, most trusts are trading at a discount, particularly those focused on Asian emerging markets. We sit a little bit wider than the average, partly because of that small cap focus. And we think that, again, UK investors are perceiving smaller companies in Asia as being higher risk and extrapolating the experience of UK smaller companies where the difficult macro environment has meant that smaller companies have had a tougher time. But again, we think that that's unwarranted and the asset class offers compelling returns to investors over the long term.